Hello, my name is Banks Van Pelt with Military Realty. Today I want to go over different loan types. A lot of times when a buyer is looking at purchasing a property, they won't know exactly what type of loan they need to get that best fits their needs with the best interest rates and the least amount of fees and those kind of things. So I just want to broadly go over that. Of course, with any of this, you'll have to, it might take additional information to get the exact interest rates at that time, the exact fees and those kind of things. But generally speaking, the first type of loan I'd like to discuss is a VA loan. The Veterans Administration offers a loan for veterans, retired, active duty, and the key ingredient to a VA loan is that it is zero down, okay? Meaning the veteran, active duty, or retired person does not have to put money down. They can, but they don't have to. It does typically come with a funding fee that goes to the VA to cover any kind of loan defaults, but otherwise, it is true zero down, and if a person is disabled from the military, they don't have to pay that funding fee. So that's really good, and it also has lower interest rates. So that's number one. Number two would be USDA. That is another zero down type of loan. It's made for low to moderate income people to help them be able to purchase houses in rural areas, and that's goes by county. Okay, so you would have to check and make sure that the county you live in is considered rural enough to allow for a USDA loan. If it's not, then it's not even it's not even a possibility. But if it is, then that's another way that somebody can get a potential loan on a property without having to put any money down. Now, it also does have an insurance program that goes along with it, and there's also two different levels, and it goes by income levels. So there's way too many of those to describe in this, but the bottom line is it's based on the number of people in the household and the amount of income earned over the previous 2 years. So we want to talk to a loan professional in order to make sure if that's the right loan for us. Next would be FHA. This is with typically a 3.5% down. Of course, you can put down more, but that's going to be the minimum, 3.5% down. It does also have mortgage insurance, and it also has a funding fee. So again, we have to look at those things, but it allows a person to buy a home without putting up such a large down payment if they don't qualify for the VA or USDA loans. And then finally, we have a conventional loan, which can be anywhere from 5% down to whatever you want to put down. Typically, the magic number is 20%, because on this type of loan, what we're trying to do is get away from mortgage insurance, which we find in both the USDA and the FHA type loans. So if we don't have to pay that mortgage insurance, that can be really nice because that can be a pretty substantial amount depending on the loan amount. So that's the last factor we want to find out. If we don't qualify for any of the other programs and we want to do the conventional loan, again, trying to get that 20% down. If you only want to put down 5%, you can do that, and then you would have some mortgage insurance to go along with that. So I hope that briefly explains to you the different types of loans and who qualifies. All right.